Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature. Looking at the mini mid cap actually, so we're going to go ahead and pull up the S&P 500 futures. And of course, we're looking at a pretty impressive sell situation here. In fact, from a free informational day trade perspective, those of you tuning into the video, we're going to get right to it. You got a beautiful sell here at 1222.50, 1222.25 to 50, and that of course is in the March 2012 contract that we're looking at, the front month contract. And so we had a beautiful retest. Obviously, you can see these are intraday dynamics. This is what we use to gauge where the market is likely to go. And as you can see, green means bullish. That means you will definitely want to be buying or positioning yourself on the long side of the market. Red means sell, which means you definitely want to be positioning yourself on the short side of the market, or certainly selling any long exposure that you might be particularly nervous about. We prefer to short and hold our longer term longs and just ride particularly derivative shorts, hedging shorts if you will, like the mini S&P 500 futures contract. As you can see, this of course is Monday, the 12th day of December 2011, and as you can see here on Friday, we had a beautiful uptrend day. In fact, it's been a couple of great days. If it moves, we can trade it, and we love a market that moves. And as you can see, Friday right here, we had a beautiful uptrend day, and lo and behold, our intraday dynamics, all of our proprietary indicators, were suggesting the market would continue higher. We had all green, green accelerating, positive divergence here, actually moving into the brilliant green, and of course green accelerating here. So you did have a full bullish indication, and of course came right up to that very round 1250 mark in the mini S&P futures. Thursday, the day prior, we had the exact, it was antithetical. We had a beautiful gap down, came up to retest the underside of the trend right here, didn't really fill the gap, but again, our indications were the market was bearish, particularly so once you have these unanimous efforts. You're really going to get a nice move, and that's exactly what we had. And we had beautiful returns on that day. We'll actually look at why the market's behaving in this manner as technicians. We'll look at it in a second, and also how we were able to profit nicely from those sessions. And of course, we got the big gap down here on Monday. The market again has retested the trend. You see a bounce there, tried to get above, but just fell right back down on Thursday. Tried to hold. We're going to zoom in a little bit. It's obviously the free informational trade is short from 22 to 25. Go ahead and stop at around 27. Right now, all signs are continuing to point to the bearish side from an intraday perspective. But if we switch over and look at a chart of the daily market, we'll pull that up here in a second. See where that is. There we go. We're still officially bullish on the market. The market is in bullish mode, but the first thing that jumps out at you is this uptrend. We have this beautiful uptrend. The market tried to break it down, came up, retested it, and did confirm the break, and then went on to finally test the prior lows. This was in October, and test the August lows. We were looking for that test all throughout these little spikes lower, or these little breaks lower that we had seen in the market. Finally got the retest, and lo and behold, we do get back above the trend and actually trying to accelerate and come back down and print a pennant formation, as you can see right here, triangle formation, which we knew would lead to a very substantial move, directionally speaking, but we didn't know really which way the market would break. Obviously, it chose to break lower. It did so pretty impressively. Fell all the way back into this trading range that you see from 1100 to essentially 1200 roughly, and bled back in there, but now it's clawed its way back up, retested the underside of the trend. This is why we knew this would be resistance. There's also a 200-day SMA from which the market is trading, or king, right around here as well. So that, in concert with the underside of the former uptrend, was monstrous resistance on the market. So we definitely weren't buying, and in fact would have been bullish had the market followed through, but it just wasn't able to. And now we have the lion's share of the market support in all the key trend following measures we follow: 30% bullish, 20% bullish and 50% bullish right here around 1220 in the market. So there's a monstrous amount of support, there's a monstrous amount of resistance, and that's really why the market was drawn like a magnet back to that congestion. That's where the money is. Where is the money? Where are the traders? These are the buyers and the sellers. You have the sellers right here, monstrous again, levels of support, or sorry, resistance, and you have monstrous inflows of money coming in here, although you see the market today, particularly intraday, is bearish, and you're getting a lot more selling. That could easily turn around come tomorrow, but right now that's what we have in the market. We did kind of expect a move down to maybe 1210, 12:15 intraday today. It's about 2:30 Eastern Standard Time, so we'll kind of see how that plays out. What was noticeable is particularly this is our free system. You can still trade this for free. It doesn't trade very often, but when it does, you can see that it's pretty impressive going back to 03. $65,000, $12,000 drawdown, $2,000 per trade, but nevertheless it keys off sentiment from a contrarian perspective, and you saw an astounding amount of complacency on the 6th day of December. I mean, that would lead you to believe certainly the market was not likely to continue higher, and lo and behold, it did roll over in favor of the bulls. Right now we are seeing, particularly even though we have that monstrous amount of support around 1200 to 1220 in the ES, an extreme amount of fear. We're seeing a reading of 0.94, almost 1. Any measure over 1 is certainly fearful in our book, and when people are fearful, buying puts to hedge the downside, everyone thinks the market's going to go lower. Usually it goes higher and does the opposite. In fact, the opposite was true. With the complacency reading, everyone was greedy just a few days before, thinking the market was going to break higher, and it didn't. So that's kind of interesting there. Just looking at, so that's a daily perspective. We are bullish. If we break below 1200, back into this range, it's probably going to be particularly bearish, but this does overall look like a particularly bullish formation, so we are officially bullish on the market at this point. From a directional movement perspective, obviously it's a little bit in terms of neutrality. We haven't had many directional moves on the daily chart. From a momentum perspective, obviously we are both short-term bullish and intermediate-term bullish. This is intermediate-term neutral. That should not be blue. And short-term bullish, although it's waning a little bit. So really some mixed indications on the market. Should resolve itself certainly in the next few months, but it's definitely exciting and particularly interesting to see. And we're going to look, what we're going to look at. We're going to look at the performance of this portfolio, or this system, actually, the free system. MRSTF, let's see how that's done. Beautifully, beautifully. $500. I believe it just closed out another winner right there. Beautiful move. And we didn't want to move that. We just wanted to look there, have a little look-see. 665 up to about 732. Beautiful. I take that back. Obviously, that's about 685 still. $4,000 winner on the MRSTF. MILTF. What were we wanting to look at here? I guess that was about it. Oh, there we go. So we wanted to look at the MRCM. And as you can see, just continuing to trade beautifully. Had a little bit of a pullback there, but actually is short now. Beautiful short setup there. As you can see, we could... can't really go there on the chart. 870 down to about 830 or so, and then right back up on the long side and the back on the short. Just a simply a beautiful trading model. It is short now, which is good. Particularly, we wanted to make note of that. Given this right here, another swing system, the EMD. This has been around for about 8 years and continuing to put up gains, as you can see over the last since August 16th. It's made about $40,000, about $30,000 per contract. Yeah, that's per contract. But again, as we always recommend, you have diversification. This system is actually long, so it's actually a loser. But as you can see, the money that it's made, again, it's been around for about 8 years, has been astronomical, and it can really accelerate to the upside. $35,000, $400 every time you place a trade. See how the Evo's doing. Beautifully as well, breaking out. There you can see, we'll see how the Evo EM Active is doing. Beautiful again. I think that's put up some nice winners. Whoa, yeah, that's put up some nice winners. The Evo EM Active, 866 up to about. It's very hard to see. I'm sure it's hard for you guys as well. I mean, you just really can't even read that. But obviously about a $2,000 per contract gain on Friday, and at least $1,000 gain on the 7th of December. So really just putting up the amazing windows, Evo EM Active, and you can actually substitute trading models. Substitute this one for any kind of other EM. Well, actually, you can substitute any model that you like if it fits more of your style. But we're going to move on. We're going to minimize that and hope we don't go to a blank screen. We're looking at some of our platinum portfolios. Our platinum portfolio, we haven't offered these to the public. As you can see, the performance have been absolutely stellar. $120,000, $8,000 drawdown. $400 every time you put on a trade, and there you see breaking out to new highs for the EVR3, the ISR, beautiful equity curve, couldn't ask for anything better. ISRD, simply beautiful. Every time you see a green dot, it's beautiful. That means you're making a new high. EVMCM, again, green dots, beautiful, continuing just to make money. Not really, a little bit of a pullback in the CBR. Here's a newer trading model, EMDS. You can see that right there. Go ahead and minimize that. Just booked. This was developed last week, actually. Certainly with all of our rigid criteria to meet the fact that it will continue to perform, and we also have models that are derivation of other models. I'm not sure. I think this may be an iteration. Certainly we extract components from key models and develop new models that have been tried, true, and tested over many years, but nevertheless, it was right off to a beautiful winner. It bought around 41 and sold around 81. The EMD contract unfortunately gave about half of that back. It bought just Friday as well, but as you can see, it's simply outstanding and right off to banking $4,000. Its first trade of live trading, it made $4,000. You're going to make on average $200 every time you place a trade. $83,000 over the last several years. That's going back about 10 years. And there's the equity curve. And as you can see, again, makes $4,000 as its first trade. And then, of course, the R30A hasn't really been trading, but again, beautiful, breaking out to new highs. R30B, and of course the R30C. So those are the platinum trading models, seeing how they're doing. We're going to go ahead and minimize that. And we're at a blank screen, so we're going to fix that real quick and go right back to how we've actually been doing in the real-time tracking that we use from Strategy Runner. And as you can see, two of our portfolios, this is in real-time tracking since February, or January actually. MSAUDT is up 400%. This does not include slippage or commission, although one could argue, since these are demo accounts, that these are live tracking accounts, that the slippage, we've actually done some testing against the demo accounts versus the live trading fills, and there's actually averaging out, there's no slippage. We did that testing back in 2007, but you could deduct slippage if you want. You can deduct fees. I mean, when you have returns of 400%, there's a lot of room to play with, particularly when our actual target in real world trading is about 100 to 200% per annum. We're essentially doubling that with the amazing year that these two portfolios, and even the Delta DTS, the new Delta DTS there in real-time tracking, up 381% as per Strategy Runner's figures. And those figures are actually, if you go to the website, you can click on the MapDT or MSAUDT right there, and you can go to the live real-time portfolio tracking, and you can just we'll open that in a new tab. That's actually what opens. Already had it open. There we go. So you can go down, you can see real-time tracking of the MSAUDT portfolio as well as the MapDT. Now this of course is real-time tracking. These are pulled directly from, sorry about that, directly from Strategy Runner. We did have a bit of a glitch in our tracking, obviously, because, as most of you know, MF Global purchased Strategy Runner and then, of course, went bankrupt the next week or so. So that's very interesting. They did have to switch over their servers, so some of our tracking has been interrupted, but smooth running once again after a couple of weeks of transition. So everything's pretty smooth running, and there's the real-time tracking of the aforementioned performance. Now that goes back to January 28th. That is the total of the figure that we're looking at here. We can go ahead and X out of that and X out of that. That leaves us with this. This total right here is derived, pulled directly from Strategy Runner. There you can see over the last couple of days. In fact, the last 8 days, well, there you have it right there. The last 8 days have been absolutely stellar. The TTHR actually has been the leader with 75% gain in real-time tracking. And there you see over the last couple of days why TTHR up 33% on Thursday. MSA UDT was up about 8.5%. MAPDT up 12%, 15%. The Delta DTS about the same, consistent returns. MSA UDT up 17% on Friday. So, excuse me, the fees for these portfolios, MSA UDT, I mean, we're talking about maybe $1,200 actually. MSA UDT, I believe, is $788 in 3 months. So you're looking at doubling your fee in 1 day's trade of the MSA UDT. The day prior, $845. You know what? I believe there were some trades unaccounted for with the MSA UDT that should have actually gone off, if I'm not mistaken. But I mean, you can pay for the rest is pure profit. The rest is pure profit. You can pay for your fees, and the rest is pure profit. So if you have any questions, feel free to go to the website, peruse the website. There's MSA UDT. Went ahead and put that in there as well. There's going back over, and then if you want even further, you can look down here at the actual product. This picks up around February, before the live tracking. There was still live tracking, but the latest run-up has been since February, and as you can see, we had just had a drawdown prior to then. Usually we track the run-ups, and obviously 450% is an amazing run-up over about 9 months, or 11 months, almost 11 months. So there you can go look at the actual history of the portfolio. And we had mentioned actually back then that this little coiling formation suggested there would be some pretty impressive moves, and we'll probably get a chart of this out by the year end for the updating again, as we did for 2010. Updating the whole of the having a look back, and then this course concludes $26 for slippage and commission per round turn deducted. So if you guys have any questions, go to the website, chat with support team live. You can do so by clicking this button, and shoot us an email to admin@MiniAnalyst.com. Hope you enjoyed the free informational trade and the daily market analytics that we provide you, and would love to have you come aboard and participate in these wonderful profits that our portfolios generate. As you can see, particularly those who follow these videos every week, the profits that have been generated. So we will see you next time, and hope you guys take care.